Hi everyone, welcome back to our channel. Today we're talking about something a lot of service members set up early on and then don't always revisit. That's life insurance. For many military families, that starts with SGLI, Service Members Group Life Insurance, which now offers up to $500,000 in coverage. On the surface, that can sound like a pretty solid number, but as life changes, promotions, family growth, buying a home, that's where the real question comes in. Is that the right amount for you? I'm Kyle Craddock, here with Chad Nolte, and today we're walking through that. Ready to get started?
Let's do it.
So let's build on that. When people hear that $500,000 is tied to SGLI, it can sound like more than enough. But what should you actually be thinking about to know if it still fits your life today?
Great question. SGLI is a good starting point, but it may end up being more or even less than you actually need. It's worth considering if the coverage meets your current needs and any anticipated changes. For example, there could be changes in income, caregiving needs, children, marriage, and even divorce.
Right, and I think that's naturally where people start looking for a shortcut or rule of thumb. So you'll hear things like 10 times your income. But how should military families really think about that? What's a better way to figure out how much coverage you actually need and whether SGLI on its own is enough?
It should be an ongoing conversation. What you should do is a needs analysis and take a look at what the actual needs and goals of the family are. A good acronym is the DIME method. D for debt, I for income, M for mortgage, and E for education. And it's also worth adding in final expenses. What you really need to do is take a look at all your obligations and subtract that from any savings you have along with what the SGLI is already providing. And you also need to consider future obligations. For example, the cost of a house today is a lot more than it was 17 years ago. Back then, you could buy a house for a little over $270,000. That same house today, it would cost you closer to $500,000. Same thing with college education. The cost of in-state tuition for a 4-year college degree was around $6,600 17 years ago. Today, that number's closer to $12,000.
Got it. So it's less about the rule and more about what your family actually needs covered.
Yes.
Now, if someone goes through this and realizes, okay, there might be a gap here, how should they think about their options at that point?
It's not about replacing SGLI, but supplementing it. It's important to consider how long the need is because there's two types of insurance. There's temporary and permanent. Term life insurance is a type of temporary insurance that can meet a need such as a college education, whereas permanent insurance is something that can be used in retirement, such as funding income or final expenses.
And that makes sense. So it's really about matching the type of coverage to the timeline of the need.
Correct.
And that's where this starts to shift a bit, because it's not about what coverage fits today. It's also about what happens to it when your military service ends. So how should someone start thinking about that transition as they get closer to separation or retirement?
Before leaving the military, it becomes a transition planning conversation, even before final physical. VGLI, or Veterans Group Life Insurance, is insurance veterans can take with them when they leave the military. However, there are pros and cons. One pro, there's no medical underwriting. However, a con is that it increases in cost over age. It's worth comparing VGLI to private insurance before you make your final decision.
Right, and that's where people can get caught off guard because it may feel manageable at first, but it doesn't always stay that way. For example, $500,000 of VGLI might be around $145 a month in your early 50s and closer to $425 a month in your early 60s. So what feels affordable now can look very different over time. So why is it important to start planning before leaving the military?
It's worth reviewing coverage early, while private life insurance may still be affordable, and before military transition creates a sense of urgency. Revisit coverage after major life events, such as marriage, divorce, children, buying a home, or what I often see overlooked, beneficiary changes. And also, consider future costs.
At the end of the day, it's about giving yourself options before transition forces you into a quick decision. If someone's listening and thinking, I should probably take a look at this, where should they start?
I'd start with reviewing your existing coverage, your financial goals and obligations, and ask yourself, what would your family do if all of a sudden your income was no longer available to them? That's why I also think it's important to visit with a financial advisor who understands military life and benefits.
So Chad, it's not really about following a formula or assuming the default is enough. It's about making sure your coverage lines up with your life today and in the future.
Exactly.
So SGLI can be a strong foundation, but it may not cover every family's needs. That's why it helps to review your coverage early and make sure it fits your situation.
Yes, absolutely. Remember, you've already done a lot to protect your nation. Don't forget about also protecting your family.
Thank you for joining us, Chad, and walking us through that.
Thanks for having me. This was great.
And if you want more conversation like this, make sure to subscribe to our channel.